Welcome to Financial Focus, brought to you by GulfCoast Financial Services founder and CEO, John Kuykendall. John and his team of financial, legal, and tax professionals have provided North Florida savers and investors sound, comprehensive financial guidance for over 25 years, helping you to achieve important life and planning goals. Be sure to like, subscribe, share, and tune in for more Financial Focus by visiting GulfCoastFinancial.net.
And welcome into the program. This is Financial Focus, brought to you by the best of the best in financial services, as named by the readers of the Lake City Reporter, 7 years and running. The team from Gulf Coast Financial Services, founder and CEO John Kuykendall, always here providing us the guidance and the insight, providing a little perspective on our money and helping to uncomplicate the difficult financial decisions that we all face. And John, certainly recently here to begin Q1 of 2022, volatility has sort of been the talk of the day and the concern that investors are looking at with the market.
Well, that's right, Peter. I mean, we really weren't expecting the Ukraine situation to happen when it did. And when we started 2021, we knew things were going to be rocky, but we thought that it would be more small dips here and there, kind of little market corrections, as we go along. But we didn't realize that we were going to be fighting a war. We were going to be involved in inflation that, during the month of February was over 7.6% for 1 month. That's a lot of inflation. And then on top of that, when you see these gas prices going, $4.50 and higher, it's amazing. I got a 36-gallon gas tank on that truck, and I refused to let it get more than a half a tank before I filled it up. It just hurts too much.
Yeah. And so the Russia-Ukraine conflict, I think, is an event definitely that has had influence, but just a smaller part of the total ecosystem where we sort of expected this year, because of other headwinds we were facing, to include a little bit more volatility, maybe than a lot of investors have gotten used to over the last 12 or 14 years.
Well, we've gone through a really rich period. I mean, there are a lot of advisors who've gotten into our business who have never been through a downturn. And so, I mean, it's been an easy ride for them. And this is a new phenomenon where, we actually have corrections, and we're worried about going into bear territory, and we're seeing the S&P, almost off 20%. So it's a different time. It's a difficult time, and we have to be cognizant of what we're doing. And if we're on a tight time frame, or if we're in retirement or getting close to retirement, we've got to be concerned about what's happening to our portfolio as I'm off close to 20% and I'm pulling money out at the same time. That has a way of, impacting our portfolios a lot more than what we should. And so I think our topic today is right on, where we're talking about that favorite word, annuity. I mean, I know a lot of people hate it, and I think, a lot of people hate it to get their 5 minutes of fame. And there is nothing wrong with annuities. Now, there are certain annuities that we certainly shouldn't touch, the ones that have high fees and don't have the insurance guaranteed protections that there are in place in some. But, annuities on the whole front are good.
Well, John, on this program, we have taken time in various episodes to focus on a tremendous number of the different choices that we have with which to invest or deploy our dollars. I mean, we've talked about different bank account options. We've talked about stocks, bonds, mutual funds, ETFs. We've talked about a lot of the different tools. And I think that you've taken a very fair and unbiased approach that each one of these options has particular strengths and weaknesses, has pros and cons and benefits and disadvantages. I think you've done a fair job in presenting that and really giving us the 30,000 foot view that all of these are simply tools. We just have to go through a process of arriving at a conclusion of which tool is appropriate to help us achieve the job that we want done. And annuities are no different. They are one of those tools, not always evil, not always the correct solution, but there are certain things that an annuity can do for us that are worth discussing and considering.
Well, that's right, Peter. I mean, we don't want to go out in the garden, with a shovel, and that's all we have in order to plant our garden and to weed it. I mean, we'd be there forever. And so we do have to have the right tools. And, back in the 80s, when we did away with defined benefit plans, and we did away with those guaranteed checks that the employer were sending every month to supplement retirement, and started the 401ks where we can spend our, it's a lot more risky because we're in the market all the time. Then, the whole lifestyle changed. I think it's been proven that the generation before mine actually had it pretty good because they had that monthly check coming in, and they had enough money coming in that they didn't have to spend down their investments, and they could use their investments as their reserve fund, their travel fund, their want fund. If I want something, I can take it out of my investment because my monthly needs are covered by my checks coming in. And that's what an annuity can do for you. It can provide you that guaranteed check every month for as long as you live, and gets guaranteed by the insurance company. So, it's kind of like you put your money in the bank and you start drawing it out. At some point in time, when it gets to zero, they're not going to continue to send you a check.
Right.
But the insurance company will. That account can go to zero. And if you're still alive, you're going to get a check for as long as you live.
While that is very valuable, and I think people would like the ability to rely on a guarantee of continued income, still, John, annuities are widely debated, and there seems to be a lot of discussion on both sides, a lot of confusion about annuities. I once heard a parable of three blind men who were tasked with describing an elephant, and the first one grabbed onto the elephant's trunk and sort of described that. The second one grabbed onto the elephant's tail and sort of described that. And the third one grabbed onto one of the elephant's legs. And so there were three very different descriptions. And I feel like that may be one of the causes that there is so much confusion about annuities, is because there are different types. And maybe if we could back up and describe what an annuity actually is, or maybe define some of the different types of annuities, we could narrow that conversation down and maybe be a little bit more accurate and therefore appropriate in our consideration and discussion.
Well, Peter, a lot of the bad hype that annuities have gotten was caused by the insurance companies and the people that sold those in the early days, because they're all, some of them were bad. I mean, they just were really bad products. I mean, they had high surrender fees, they had high fees in general, and they didn't make any money for the people. So, but if we look at the new annuities, the annuities that we have to offer today, they are great products, and all of them serve a need. A fixed annuity will give you a fixed interest rate for a fixed period of time. We have clients. I had one yesterday that called me. That's what she wants. She wants a 5-year fixed annuity, and we found one for her. Not a great rate right now, but still better than what she was going to get in the bank, and they're tax deferred.
Yeah.
So
I don't know what the rate is, but it would be hard to imagine 15, 20 years ago that we get excited about some of the rates that are available today. But here we are, where there are certain products and fixed annuity rates that are a significant improvement and increase over what comparable bank kind of products would offer us.
Well, that's right, Peter. And that's one of the things that a fixed annuity, at the end of the term, you can either roll it to another annuity, get a different rate, or you can take it out and pay the taxes. Now, you got to be 59 and a half. That's one of the things. And so these are mostly for our clients who are post-retirees or right before retirement, already retired. There's also variable annuities. Now, variable annuities are totally in the market. I invest my money in annuity. The insurance company places my money in the market, and I get the gains and the downside. So, I mean, that works great in up markets, but not so much in down markets. But they do have a place for certain people who are more risky and who want to try to achieve more. We've really done a great job with fixed indexed annuities because they have, you get a percentage of the index. So we don't get 100% of the index, but we get a percentage of the index, and our accounts can never go below what we put in it. And every investment period, usually a year, my gains are locked in, and that's my new floor. People are really, they really like that. And it gives them a floor on that annuity. And usually those are 1% fee to none. I mean, we have some that don't charge any fees. So they're not really expensive. They also provide income, guaranteed income for life. That's what you choose. Or you can do a long-term care kind of hybrid thing where they will pay you 1.5 times for 5 years of what that monthly payment would be, and then go back to the normal payment. Great concept, really works well, especially in Florida, where long-term care insurance isn't available to anybody anymore because it's just too high and nobody's offering it. Everybody's out of the market. So that really works well. They are a great bond alternative. Bond rates are really low, are negative right now. And so it gives us the ability to shelter a portion of the portfolio, put it into a fixed category, and not have to worry about the market going down and being in a negative position.
And in fact, Tom Hegna, who you talk about on this program often, kind of an industry thought leader and mentor to many financial advisors, a trainer of many financial advisors, has done a lot of research. And his book, Don't Worry, Retire Happy, he talked about the fact that in the traditional portfolio model, whether it be 80-20 or 50-50 or 60-40, if under current market conditions and interest rate, you reach into that portfolio, pull out the bonds, and replace them with fixed or fixed indexed annuities, you accomplish three things. You lower the overall risk to the portfolio. You lower, in many cases, the overall fees and costs within the portfolio, and you increase the amount of income that the portfolio can generate. And that was actually confirmed by pretty famed market researcher Roger Ibbotson did a paper saying that annuities truly are a better bond alternative.
Mm-hmm. That's right. That's right on, Peter. And Tom's right there with it. But you know, the annuities, they're complicated, but they're not that complicated. But
it is another thing that we hear about them, though, that they are complicated. Yeah. And I agree that all financial products have some complications, some strings attached, right? But like I look at a mutual fund prospectus, it can be 100 to 200 pages, and I have to wonder if I have never read every page of the prospectus and understood every iota of detail about a mutual fund. And I don't think that a lot of people probably have a full understanding. Here's the uncomplicated part, is that if I want to sell that mutual fund, generally I can, where there are some contingencies and restrictions on getting out of an annuity all at once, typically, correct?
That's right. And what you should do is get your financial advisor to explain the annuity to you up front. How long is my surrender period going to be? How long do I have to keep the money in this product before I can get out without penalty? Because what the insurance company's doing, you're giving them their money, your money, and they're taking that money and they're arbitraging it. They're hedging it and providing you certain guarantees. So naturally, your money can't be immediately liquid for no fee. They have expenses and costs that they incur when they have to give that back. But there are on the fixed indexed annuities, you can get a 5, 7, 10-year surrender period, whatever you think comfortable with. Know what kind of indexes you're in. Know how much the participation rate's going to be. How much of that index are you going to give me every year if I'm invested in it? that, it's not that difficult. Your financial advisor should sit down with you and explain the pros and cons, whether I'm trying to grow this annuity or whether I'm trying to do the income for life and the long-term care. There are several different ways that I can structure annuities. The one thing you never want to do is annuitize an annuity, because if I annuitize it, then I have given my control of the annuity over to the insurance company, and I'm locked in for that monthly check forever. And if I need my money back or situations change, I don't have access to my money.
Well, once again, I think people appreciate the reliability, the consistency, the dependability of income, and the reassurance and confidence that income can provide us. I mean, that's why people like Social Security. That's why people liked pensions. But unlike Social Security and pensions, with those two systems, if I have an emergency, I can't reach into Social Security and pull out extra money. If I pass away and I have not received out but maybe a few years worth of payments from Social Security, the residual amount that I contributed to that system doesn't pass on to my children, to my bloodline, to my generational beneficiaries, right? Those are the trade-offs with Social Security and often with pensions. But with our private wealth, we don't necessarily have to make that same trade-off. And I think that's another point where there's a lot of confusion about what today's modern annuities do or don't do or require of us to give up in order to get a few of the benefits and the qualities that they do offer.
Well, that's right, Peter. And like I said before, I think the insurance companies and the salespeople that did these in the beginning, they really weren't investment advisors. They did a poor job of explaining these. Mm-hmm. And when you tell somebody that they have $500,000, but they have to take it $50,000 a year for the next 10 years, that's the only way they can get it. It creates a lot of headaches and conditions for them that they don't need. That's why we have to be careful what we're doing, how we're explaining it. And these new annuities, they aren't structured that way. I think it's the best product that we could ever come up with. And really, I can't think of another way as we talk about income planning. And our goal on this show since we started has been to stress income planning. We don't do financial planning as such. We do income planning with a minor in financial planning. So this income planning, these annuities, they give us the ability to make sure that every month my nut's covered and I've got my growth bucket growing for me so that I can do all the things that I want to do to have that fulfillment in retirement.
Well, John, to continue on with what I believe is your very fair assessment of the different financial options, let's talk a little bit about pros and cons, what they do well, what they maybe do not do well, or what we do need to be aware of if considering an annuity. First, if I describe my financial goals, what goals would I be discussing in the conversation where an annuity is an appropriate option or consideration for me? What goals can an annuity help me achieve?
Well, for one thing, it can help us not lose money. So if we're concerned about protection, concerned about principal preservation, this is a way that we can do that. If I'm concerned about paying a lot in fees, we can certainly, that will happen. If we want to make sure that our cash flow every month is going to be the same through retirement, and we want to make sure that my income plan has a chance to survive, then annuities can do that. Annuities are made to be safe. They're suit protected. You can't go after an annuity. You can get sued, but they can't take your annuity or your IRA. So that gives us they're tax deferred. I've got clients right now, talked with one yesterday who has very little money in IRAs, has a ton of money in cash, and we're paying taxes every year on all the gains we're making. So an annuity is appropriate for them. It also diversifies that portfolio, gives us that fixed income protection, that bond protection, but at the same time, our taxes are deferred until we start taking it out. So there are a lot of good things about annuities. Those are the ones that I think about. on the downside, with the annuities that we have here, the only downside with a fixed indexed annuity that I can think of, Peter, is I might not make as much as if I was in the market, but I'm giving up that because I've got the floors and the protections. So, there's a trade-off there. I could certainly, overall, I feel like make more in the market, but I'd be giving up that sleep at night because I know my portfolio is diversified.
So more of like a savings account kind of alternative than really an investment alternative in that perspective.
It's a tax-deferred savings account, I like to think of it.
With a little bit better opportunity for growth.
Well, right. Yeah, I mean, I do have, there isn't a chance there that if I hit it right, I'm going to make more than I would my savings account or at the bank, certainly. But I won't make quite as much as if I was 100% in the market, but I don't have the risk either. So I'm diversified. My portfolio is structured so that I can weather the storms.
So the market upside is one potential consideration, one drawback there, that we will not make all of the gains of the market in a fixed or a fixed indexed annuity. What about liquidity and accessibility, John? Because I know that's a concern as well.
Well, like we said, I can take my money anytime I want it, but I'm going to be subject to surrender fees, which are declining over as the longer I hold the annuity. But I usually can get 10% a year of my principal out. So I do have a certain amount of liquidity. If I've got 100,000, I can take 10,000 out a year without penalty, just take it back. So certainly it provides us some liquidity. I just don't, during that surrender period, I'm not 100% liquid. But I give that up because I'm invested in indexes, which give me a percentage of the market. I like that.
Well, annuities, like every other option, pros and cons, benefits and disadvantages, they are simply a tool. And John, I think that, again, we've given listeners to the program, viewers of the podcast, some food for thought of when and where these may be a tool of use and of consideration. And certainly, as bringing the show back kind of full circle, as we are here in Q1 of 2022, market volatility has been top of mind. And there are a lot of people out there that probably don't want to risk losing a large portion of their life's work and life savings.
Well, that's true, Peter. And I think as I look at our own portfolio and our own clients, we've been diverse. We've been working with annuities now for about 5 years, getting our clients more in line with diversification and making sure that we have that. I can tell you that during this period of time, we've had very few calls concerned about the portfolios or concerned about markets. They understand that they're diversified, that we've done everything we can to protect them, and while we may be going down in the market, their annuities aren't going down, and so we know that income's fixed if they need it later.
Great tool for income planning, for protection of principal, for guaranteed durability, reliability of income streams into the future. Not right for all of your money. No financial tool is, but something that can provide some benefits if the particular goal for your money aligns with what this tool does. And John Kuykendall and his team there at GulfCoast Financial Services can help you with that evaluation process. And really, a discussion of your goals will go a long way in determining what the right solution or mix of solutions and tools should be working for you to help you achieve those goals financially. Again, the team from GulfCoast Financial Services offer the opportunity for a quick call with direct and specific questions, or if you'd like a more in-depth conversation and really uncovering the tools and the strategies that would be effective in helping you achieve your goals. That full planning, review, and strategy session, something that John and the team make available to you just for being a listener or a viewer of the program. Pick up the phone, give a call to GulfCoast Financial Services, 386-755-9018. That's 386-755-9018, 386-755-9018. And John, we always appreciate your time, and on today's program, the overview of and discussion of the benefits and disadvantages of annuities.
Well, thank you, Peter. It's great to be here. I think I'm going to run out right now and fill up my truck.
Yeah, before prices go up even further.
Yeah.
Be sure to like, subscribe, share, and tune in for more financial focus by visiting GulfCoastFinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through Gulf Coast Financial Services Inc., a registered investment advisor in Florida. Gulf Coast Financial Services Inc. is not affiliated with Kovac Securities Inc. or Kovac Advisors Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions.